Hi, welcome to this video today. This is our weekly Forex forecast. It's the 16th of January, it's Sunday. In this video, we're going to pick out some pairs which we think could offer really good risk-reward trading opportunities for the up and coming week. And there's a lot of interesting setups to look at. We'll go and take a look at the charts in just a moment. Now, last week I didn't get a chance to do a forecast video, but last week really a week to forget for us. In terms of our stance, we were long of some dollar pairs and got stopped out, but now the dollar deeply oversold and we expect a good rebound. In terms of Japanese yen, we're bullish of it longer term. It's kind of consolidating at the moment, getting ready for a big move, so not much happened in yen pairs. And finally, we're very bullish of the British pound in several crosses. And the pound did okay last week. It's got far more strength to come in our view. So hopefully we're going to get a good week ahead. Now, in terms of the charts, we'll go and take a look at them right now. But just before we do so, please do keep in mind, it's my view as of this specific moment in time. It can, of course, change in line with the market action and conditions. If you want all our trading techniques, you want to learn our strategy, and also check out our daily technical sentiment analysis of 14 FX pairs, you just click on the link beneath this video and you can get live access to our member center. Now, you can also, beneath this video, check out our Facebook group and join it if you wish. Also follow us on Facebook. And finally, check out our recommended regulated broker. Now, in terms of charts, before we look at the FX pairs, I want to look at what's going on in bond markets, because they will have a big influence on FX markets next week. Right, let's go and take a look at the charts. Right, chart of the 10-year note in the US. Now, if you're unfamiliar with this contract, it indicates future interest rate expectations and inflation expectations. And you can see the note comes up nicely from 1.5. It has a little dip this week. I mean, it wasn't a big dip, and the dollar really sold off hard. The note recovered on Friday, not too far from the 1.8 level. Now, in terms of, you've got rising yields or firm yields, the currency should be relatively firm or gain strength, but that didn't happen with the USD. And you can now see how wide the gap is between the US 10-year up here and the dollar index down here. And the market here say the short-term divergence between the dollar and the US 10-year is rather big. Rates have basically done nothing since the inflation report, which was last week. Bonds are almost unchanged. DXY, on the other hand, has mini crashed. Now, in terms of why the dollar fell, a lot of people say, well, high inflation was expected. That's true. But the market is also taking the view that inflation is probably going to peak out, okay? Which we don't think it will. We think bond traders are right and the bond market will rise, and that will come in to firm the USD. There's a chart just there on inflation not peaking in the short term. This is the monthly chart of the 10-year note, and it's a good monthly candle. We should get a 2, possibly even on to 2.5. So looking for that note. Had a good day on Friday, firm up hopefully next week and firm the dollar. Here is the dollar index. You can see the full. Basically came up strongly here. It's kind of choppy and sideways. Then we roll over to the downside. This is a big, big support level. And then we rallied back on Friday. So I think, the bad news could be in for the dollar. Strength next week should see some follow through. I also want to have a quick look at stocks, because they could come in to play. In terms of Forex markets, this is the S&P 500. And you can see very choppy price action. We rolled over from the 4.8 level down there, got back up, rolled over, coming back on Friday. You've got record inflows. You've got the majority very bullish of stocks, and yet we're not seeing a strong trend. We think the risks are to the downside. And if stocks break lower, that will also help the USD and other safe haven currencies like the JPY. And I quite like this chart here. I do like this chart here from Goldman Sachs. Our bear market risk indicator has increased and is pointing to low future returns. The current level of the indicator would imply around 5% returns over 1 year, which is not a lot if you consider it against last year. So if stocks chop about a bit, shouldn't hurt the dollar or the yen. But if stocks turn south, dollar and yen will gain traction to the upside. Just in relation to stocks, I just want to show you price earning ratios in the US. They're at bubble levels. There's the tech bubble, and there we are currently. Okay, top 10 largest stocks. Some people say, valuations don't matter. This time it's different. Whenever you hear people say that, over investment history, it never is. When valuations get too high, you do get a break. Obviously, if you have a bullish extreme, it can take time to break. Here's another indicator of stocks being overbought against the Buffett indicator. There's the internet bubble. Look at where we are now. Okay, so yeah, stocks a big bubble. They could break lower. If they chop around, they're not going to hurt our views, but a fall could come. I'm not saying it's going to come next week, but it's worth being alert for. But that divergence between bonds, dollar too big, dollar oversold. So I think the dollar, yeah, is a low risk buy. Potential upside is good. Right, what we're going to do now is take a look at some USD pairs first. I'm going to look at some yen pairs and some GBP pairs. On our first pair, which is USDCAD, I'm going to do a few majors and a few minors in terms of the USD. Now, in terms of the USD, we expect it to bounce back, and our favourite pair is actually a minor pair, which has got our biggest risk on it. I'll come to that in a moment. We'll do the majors first, then the minors. Anyone new watching our videos, we use very simple technicals, focus on big levels, look at volatility and momentum. That's it. Okay, now we've already got directional bias from the fundamentals of sentiment, which helps us keep the technicals simple. Now, in terms of USD, it's been a big sell-off, and we sold off on the day of the US inflation report. We just want a really aggressive entry. We think the selling is overdone. We will very often use round numbers to trade, put our trade entries in. So we just wanted it to get above the 125.20 level. It did go lower, but triggered a slog. And then the next day, tail, can't get to tail. So we think the selling is exhausted, and we finish a little bit away from our entry. Okay, now in terms of Friday, you did have a very strong candle to the upside in crude oil, but the dollar rallied. The big candle in crude should have been bullish for the CAD. Good news, I think, is in for the CAD. Traders very optimistic about Canada. We don't share that view. Dollar oversold, so we think we're going higher. How would you play this one if you wanted to come in? You could come in on any blue. Okay. And the stop should be behind this level here. At the moment, I've got it mine at 123.80, which is back behind this round number. But I'll bring that up when I do my update on Monday. Now, in terms of our target, we expect the whole full to be retraced. So it's got a pretty decent risk to reward on it. You could wait for a break of the next round number, 126. If that broke, then your stop would be behind the next round number back at let's say 124.70. Okay, next major is going to be AUDUSD. Again, here we've gone for an aggressive entry. You do have a rally retracement, pretty choppy price action in this pair. On the day of the US inflation report, bang, up comes this big blue. Next day, we can't get through the round number. Just see a little tail poke at it, and we finish red. So again, we'll go for an aggressive entry, 72.60. We fall down towards the 72 level. Now, in terms of trading this one, you look to sell a retracement to first level resistance, come off the level, or take a break of 72. Now, at the moment, I've got my stop at 73.60 back here. But if we get through 72, I'll bring it tight in behind the level, probably 73.20. We're looking for a fall down to the 70 level with a possible run on to 65. Now, in terms of commodity currencies, you see a lot in the media about how bullish they are. In terms of, commodity prices have been strong. But global growth is slowing. Commodity prices will peak out. China, biggest consumer of commodities, is slowing. So I feel they're vulnerable to weakness. Okay. Where should we go next? I'm bullish of this one against or in the crosses longer term, but against the USD, I think this move is really overdone. Come up really strongly, and we do get above the 137. We'll finish blue just basically at the level. We'll go aggressively at 136.70. So in the market, and we're at our entry. Now, in terms of the British pound, next week, data out of the UK is forecast as good. So I think the good news is in for the British pound. How would you play this one? If you go through this low here, I think it's a sell. And the minute I've got to stop at 138.30, but I'll bring that down behind the double top if we get through the low. I think we can go to 134, possible run on to 132. So the pound overbought in the short term. Now let's go and look at some minor pairs. Sorry, here we go. My first minor pair is USD NOK, USD Norwegian krona. Look at this one. In terms, NOK is heavily influenced by crude oil, which I expect to break, but the dollar is gaining some strength anyway. We did an aggressive entry again above this 870 level. We finished above it, but look at that tail poke down there. Went to the bodies, but couldn't get to the tail there. And we finished nice and blue. How would you play this one? You could buy back to first level support or wait for 880 to give way. If 880 gives way, I haven't drawn the level in, but you could put the stop behind 870. So you'd have a risk reward of 4 to 1. My stop 857, I will bring that up in Monday's report to 862. So yeah, also with the Norwegian krona, an interest rate hike is factored in for March already. You've got strong crude prices, but that's kind of priced in. Crude, I think, will break down. Yeah, I think USD looks good buy on the NOK. The one I really like, though, is this one. USD CZK. Right, in terms of this pair, it's got our biggest allocation on it. I think it's really attractive. Now, if we look at the CZK, it isn't just strong on the US dollar, it's just strong across the board. Now, why is it so strong? Well, dollar peaked out here and we came down. Then the central bank in the Czech Republic hiked rates to 3.75%. Then the market, speculators pile in long of the CZK, anticipating that the Czech central bank will raise rates to 4.5% in the next few months. So they really pushed the dollar down on that. And of course, the dollar was weak as well. There's the inflation report candle down. Okay. Now we want an aggressive entry. In terms of the way I did the entry at the time, it's just through these bodies over here. The line isn't needed now, but that was at 836. Okay. Make a new low, no more sellers, come through our entry, nice blue. Then next day we opened, same level, tail poke down, but can't get near these bodies or the tails. Finish blue, but off the high. I just think this one's a buy if we're above the 2140 level, and we should see a significant rally. Now, in terms of where you put your stop, you could put it just tight behind this second level here. If we get through the high, the minute I've got mine at 2114 behind the tail, but I'll bring that up if we get some blue. A good risk to reward. It's 1, 2, 3. It's about 5 to 1 to first target, 7 to 1 to second target. That's obviously, if our view is correct, it's just our opinion. But when you see these really massive, sell-offs or rises, you very often get a big counter move and a significant retracement. So I think 2240 is definitely on the cards. We'll see if we can get even up to chart highs. But yeah, I just like the look of it. What more good news is coming from the Czech krona? Just don't see any speculators loaded short the dollar oversold. So we'll see. Another couple of minor pairs I like. USD PLN. These are all obviously Eastern European currencies. PLN drops the dollar down, or pushes the dollar down to this double trend line support. Okay, so big rally starts there. We do get through the level, come down to this support zone here, get back above first level support. We're long. Any blue next week, I think that's a buy, and I think we'll get back up to chart high. It's got 410 in between. I haven't drawn the line in, but again, it's a really good risk to reward. There's smaller allocations on this one and the other Eastern European currency I like, which is USD HUF. Big fall down. There's the inflation candle. Comes into a support level. We briefly poke through it, come back up, then we can get long, going back to chart highs. If we get through the high next week, the stop probably come behind this first level of support. So they're the USD pairs. Are very aggressive entries for us. We'll see if the dollar can rebound. Now let's go and take a look at some yen pairs. Yen pairs and pound pairs to finish up with. Now, in terms of this one, it's CAD JPY. Now, I do like JPY long against the NZD and AUD as well, but I think this one is my favourite, and CAD very overbought in our view. Now, in terms of the dollar firms up, the yen should firm behind the dollar, and also there is big speculative short trades against the yen. So we're looking for speculators to get taken out. Now, we come down, then we rally back. And you can see this little red I've got my cursor on. Touches 92, and we want to come in very aggressively. We'll go at 91.70. You can see the entry. Then we follow a little bit through to the downside through the next round number at 91. Now, my own view on this one is you could sell a rally back towards the resistance levels, or if we get away from the round number, say 90.70, it's a sell for what I think could be a big decline. Now, my stop, just in case of rally, is still pretty wide at 92.80 behind this outer Bollinger Band. But if we get through this low, I'll bring it down tight behind the 92 level. Plenty of downside potential against risk in our view. Now, in terms of another yen pair, JPY, now in terms of this pair, reason I like it is to do with bond yields. Euro rallied because euro, interest rate futures rallied. They basically are warning of an ECB rate hike this year, or ECB rate hikes. Now, in terms of the Fed, they're definitely going to hike, okay? But I think the market view that the ECB will is misplaced. I don't think there's any chance the ECB can raise rates at all. So basically, I think the bond yield will fall back and they'll pressure the euro lower. Now, despite euro bond yields being pretty firm in this period here, we couldn't get away from the 131 level, just trying to push away from the level. We couldn't. We decided to come in short. We did it through these bodies here, 130.50. Did go down quite nicely, then reverses back to our entry. Okay, this one's got limited upside, plenty of downside. In our view, you could sell back to the resistance levels if you wished. You can see where my stop is, or you could take a break again of 130. We go through 130, your stop could be tight behind the 131 level. Okay, so we'd bring our stop down if we get through 130 to right behind this level, looking for a move down to chart lows, longer term, very bearish, down to 120. That is obviously a long-term target. But yeah, I think in terms of this one, upside limited, plenty of downside. Right, let's have a look at some British pound pairs, and I'm going to look at GBP CAD first of all. Now, in terms of this one, rally up in the pound, down to support, up, down to support, coming up. I put a small trade in already, but I want to add my main trade above 172. Okay, and I think that's a good entry if you want to come in. above the 172 level, say 172.20, the stop can be then typed behind this first level of support, say 170.70. You've got good risk to reward the first target. You can see that's 176. But you can see longer term, we're looking for 180. Okay, so looking for this one to develop into a really big uptrend. Pound very oversold on the CAD. Last pair I'll look at, GBP NZD. Been bullish of this one for a while since we broke back above the 190 level, and it's a great uptrend, about 1,000 pips. Okay, I'm looking for 1,000 pips more. We've done 3 trades in this pair. We've just got back in to a trade after stopping ourselves out. We came up really nicely. We came through the big 2 level, stopped ourselves out. Then we came back in on that candle. I thought, yeah, get above the 2 level, we'll follow through. Came back, but low volatility candle. And then this blue pushes up quite nicely. I think it's a buy if we're strong next week. Stop behind second level support. Yeah, you see the 1,000 pip rally there, looking for another 1,000 pips. So we'll see if that view comes to fruition. This has been one of our best trends that we've been following over the last few months. Overall, the markets have been a bit choppy. They've lacked a bit of volatility. We'll see what happens next week. But USD looking for that bounce, yen to firm, and of course the British pound. But that is the video for today. Thanks for watching it. Take care. Have a good day.